Hi, good morning. It's Monday, 3rd of September 2018, a new month. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every business day. And like every business day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything there. For example, also the key information documents, the kits, if you like to read them. Also on our web pages, you will find information about the different client categorization, retail clients and professional clients. Since August 2018 in the European Union, we have different options for retail clients and professional clients. Retail clients will have a maximum leverage up to 30. Professional clients, if they apply for the status, can still get a higher leverage up to 500. All details about that, how to apply it, and more on admiralmarkets.com. Or you see here 2 pictures. A picture show more than 1,000 words. If you trade as a professional client, DAX 30 or Euro dollar, your margin requirement will be quite low, 24 euro or 200 euro in these 2 examples, or 600 euro or 3,333 as a retail client, as the picture shows you, and more about that, like I said, on admiralmarkets.com. Retail clients will have an unlimited protection against negative balances. Professional clients will have an protection up to 50,000 British pounds, what is around about 70,000 euro, via our negative balance protection policy. Again, check all the details out on admiralmarkets.com. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices. So my English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, like today, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's Dirk's Day, our leading day traders live every business day, every trading day to the same time. And of course, if you'd like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 or Euro dollar, typically spread during main trading hours of just 0.8 points or pips with Admiral Markets or Admiral MT5 trading accounts. No additional commission. Also here, check it out on admiralmarkets.com. There you'll find also something about our regulatory background and how to contact us. You can call us, you can send us email, or visit YouTube or Facebook. Usually all our live webinars will be available on our YouTube channel a couple of hours later as a video. Enough from my side. Now it's time for our day trader of today. This is Jay. Good morning. Good day, Jay. What's your view to the markets today?
Good morning, traders. I hope you're all doing really well and you had a nice weekend. I certainly hope so. Let's see if I can transfer my screen. 1 second. There you go. Can you hear me? Chris, can you hear me?
Everything fine.
Okay, excellent. All right, let's start this again. Good morning, guys. Happy to have you. Hope you all had a great weekend. We had an excellent event over the weekend. 58 traders. It was amazing. Thanks for everyone who showed up. Excellent. Headlines. Risk off currently this morning initially. Asia equities were red. Why? S&P almost traded flat. NASDAQ and the Dow as well on Friday. So Asia was mixed. We had Australia flat. We had the Nikkei down a little bit and China down. Excuse my voice. The Dixie, the index US dollar versus 6 other weighted majors above 95. That's a key level. We're looking for that level to hold and for potential dollar strength to continue. Please recall today is Labor Day in the US. So very thin markets expect larger moves and increased volatility. We saw it this morning as the GDP numbers came in worse than expected. Pound initially saw some hefty moves. Cable, as we see it right here, around 129.10. That was just prior to the numbers. If I look over the pound right now real quick, where's cable trading? Let me help you out. It's at 128.895. Here's a quick picture. You see? So we're on our way to liquidity lower, but we're at a former fair value. So potential stop here. Need to watch for the reaction of the market. Also, what we're looking at is Italy 10-year yields versus Germany 10-year yields, and that's currently at 2.843%. 3% is the magic number here. If the spread goes above 300 basis points, that indicates stress. Why? Because Italian budget is expected to breach the 3% rule from the EU, and the budget is going to be presented in October to the EU, and that needs to be ratified there. So that's going to be an important event on the horizon to see if stress returns to the European Union. We also have an eye on the renminbi, especially with the China-US trade war going on, and we remain below 7, key level there. 7 would indicate hardcore stress. Long gold, we talked about it last Monday, it was exactly on August 27. And what I tend to do for the guys who are newer is at the time that we do the morning meeting, I draw in the lines, and then we'll see if there would have been a trade opportunity for us. And I'm zooming in a little bit. So the first time we got a trade triggered was here, and we saw a positive price reaction. The second time was on Thursday that we got into the liquidity zone, right where we expected a positive reaction of gold. Again, we saw a positive reaction. Now, what did they do with the liquidity above the swing? They used it to sell. What are they doing with the liquidity below the swing? They're using it to buy. So gold is trading in a box, very Dixie dependent at the time. Strength versus weakness overnight, as I alluded to, some risk off sentiment, mixed picture though, because Aussie and New Zealand seeing a short squeeze a little bit. Yen saw some strength, and the pound really weak. We had a commitment of traders report a couple of weeks back, long Swiss francs, and as we can see, that performed really nicely. Swiss franc saw a lot of strength. We had VT in here last time. I don't know if he or she is in this time. Nope, missing the morning meeting. Oops, what's going on there? He or she was short dollar Swissy, and that worked out really well. Good trade, congratulations. Risk events on Monday, New Zealand weaker, Japan stronger numbers. Then we have Australia, and I'm including China right here. Mixed picture, company operating profits a little bit stronger, but retail sales worse off. Horrific numbers expected for this week out of Australia. Commodity prices, commodity weaker. That is for an export-oriented nation like Australia is bad. We have manufacturing PMI that missed this morning, as I said, in immediate pound strength. That, I'm looking at cable, looks to continue. So we're seeking lower liquidity. We're looking for new buyers. On Tuesday, Aussie dollar, as I said, bad in cash rate. And we have the RBA expected to hold. Put together a whole slide on that, so we'll get to that in a second. Then UK construction PMI expected to come in a little bit weaker. We have Eurozone PPI, that's the input cost, a little bit weaker. That's the problem, right? So where's the inflation? Then we have obviously Governor Lowe speaking in Australia. Inflation report hearings out of the UK. It's going to be a great week. We'll make a ton of money this week because we have lots and lots and lots of econ numbers. Canadian dollar manufacturing PMI, there's no expectation out yet. And then in the US, we see ISM manufacturing also expected to come in a tiny little bit weaker, but increased construction spending and increased manufacturing prices. So that could be some inflation pressures in the US. Onwards and upwards, Wednesday, again, Australia. Most important next to inflation is GDP growth expected to come in weaker. That sucks. Caixin Services PMI expected to come in weaker in China. Very, very large influence on the Australian dollar, the Chinese numbers. Pound Services PMI expected to come in a little bit stronger. And Canadian dollar trade balance, bad for the Canadian dollar, labor productivity slightly better. And then we have the rate decision out of the Bank of Canada at night, expected to remain on hold. I put together another slide on that. We'll get to that. Thursday, trade balance Australia. Sucks, okay? Dollar, ADP non-farm, that's actually okay. We had some very strong numbers last time. 188 is also a good number. Unemployment claims expected to tick up slightly, 1,000 more, who cares? ISM non-manufacturing expected to come in stronger in the US. That's a solid number at 57. And then we have on Thursday, we have crude oil inventories. My traders know that I love Wednesday crude oil inventories. It's my payday. It's the one thing that I never miss because I always get paid. And when we have a holiday, as we do today with labor market today, it moves to a Thursday. So that event will come on Thursday. Trade balance out of China, we'll have to wait for some expectations out. Again, that's going to have an influence on the Aussie. We have German trade balance. We keep an eye on that as well. Largest and most important export-oriented economy within the EU. So we want to keep an eye on trade balance there. We have employment change out of Canada. That comes in really weak, and the unemployment rate expected to tick up. So Canada, we're usually very bullish on Canada, but right now there's some weakness creeping up, and we don't expect the Bank of Canada to hike. Canadian dollar could be a short candidate for this week. And then on Friday, we close the week off with the average hourly earnings component. Keep a close eye on that. If there is, given the strong employment situation in the US, if there is some wage pressure creeping into the numbers, we're not seeing it yet. Then we have non-farm also expected to come in stronger than last time, and the unemployment rate at 3.9. There is even an upside risk that we call it upside risk that it would come in at 3.8. We have some large banks guiding towards 3.8. And then we have IV PMI expected to come in a little bit stronger. Oh, sucks that I did it like that. Let's look at UK. Why? We have manufacturing August PMI expected to fall, and it fell even further this morning. Then we have construction expected PMI to fall, and we have services PMI expected to tick up higher. So here, graphical representation of manufacturing PMI that came in weaker, and services doing a little bit better. Meaning, service-oriented economy. What is the largest service industry out of the UK? Chris, do you know? Anyone know it? UK. Mostly dependent on which services industry? Okay, you're all asleep. Coffee not strong enough? Financial services industry. Financial services industry. Focus on new order component within the PMIs. Brexit headlines are expected to move the pound this week with an increased volatility. All the politicians are back. So if you are a day trader, have your live news switched on and make some money. Play the pound out of the short side for now. Bummer. Can't hear you, Chris. What's up? Are you there? Okay, Aussie dollar. RBA expected to remain, keep steady at 1.5. And then I put together some pictures on the CPI. As you can see, steady uptick in the CPI, unemployment rate, steady downtick. So on the surface, it looked solid until that damn US-China trade war broke out. Westpac, one of the most important and largest banks within Australia or in Australia, raised their variable home loan interest rate. My traders know that we keep a very keen eye on the Australian housing market. The Australian consumer is highly over-leveraged and in debt. And so Westpac is now raising their rates on variable home loan interests. Now, that leads to the expectation that other large banks in Australia will do the same, okay? And that then leads to the expectation of the professionals that the RBA doesn't have to hike anytime soon. So now the market doesn't expect any further hike, future hike of the RBA until 2020. So another reason why we see weakness in the Australian dollar next to the trade war. That is posing a large risk. This week we have the potential of an additional 25% of $200 billion of punitive tariffs on Chinese goods. Very, 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 very negative. Next inflation report in Australia is scheduled for October 31. Mark your calendars, your time to make some money. Bank of Canada, rate decision expected to hold. probability of a hike dropped from prior to Jackson Hole. I hope you all remember, all the central bank guys met in Jackson Hole. Prior to that speech by the governor, it was 50% probability for a hike, now down to 20%. Nevertheless, bullish economy, positive economic developments so far. 27 was a blowout year for the Canadian economy. 2018 started a little bit slower. Overall, we are bullish though. And just like the Fed, the Bank of Canada cycle, all right? So they're going to leave the door open for another hike in October. But in order to hike, two things need to happen. A, the Fed needs to hike in Sep 26. And B, that whole NAFTA negotiation crap needs to be sorted out. Last week, we had headlines, and it was I call it a free money situation if you sit in front of the screens. Twitter started firing up, the headlines started firing up that US and Mexico agreed on a bilateral trade deal. Trump started tweeting, I'm not going to call it NAFTA, it's going to be called something new. All right, good. What you need to know is that who cares what Trump is tweeting? Yes, the market reacts to it. So I care in the sense that I make immediate money buying the Canadian dollar, because the logic is if Mexico is sorted positive, then Canada will sort it next in a positive manner. So the weakness in the Canadian dollar stops and Canadian dollar rises. Easy money. But Congress needs to ratify this Mexico deal. Congress is in recess. Congress is not going to get to it until November. So nothing is done. Zippo, nada. And Congress highly likely wants to have a tri-party deal, i.e. Canada included. So talk was that Canada was to agree another deal with the US by last Friday. Did that happen? No. So no deal, no nothing. Bank of Canada cannot hike until that crap is sorted. Dollar, non-farm employment change expected to come in strong. I put it in here. Here's the payroll numbers, average hourly earnings. That is important for us. We keep an eye on that. And then the unemployment rate. I already talked about all those components. For your info, why was July so bad? July was bad because it was negatively impacted by Toys R Us. He or she who has kids knows Toys R Us. Even I liked Toys R Us. Unfortunately, they went bankrupt in the States and globally, and they were in more than 30,000 people in the US lost their jobs, and that negatively impacted the July report. So there's an expectation for a rebound in August. Then, as a sort of leading indicator for non-farm is always the ADP, and the ADP last time was really, really strong. Initial claims are at a 1948 low, population adjusted, and job openings are at an all-time high. There are 6.6 million vacant jobs in the US. That is more openings than unemployed people. Amazing situation. And wages are not rising significantly yet. That's called the Phillips curve, all right? So we have full employment. Where is inflation? So the focus will be on that component, the wage growth, and currently we have a 67.8 probability for 2 more rate hikes this year by the Fed. Stronger dollar, difficulties for emerging markets. So keep an eye on the emerging markets, which have on the currency side a meltdown. Commitment of traders report. Attention, attention, Aussie dollar long signal. It's a signal. It's one puzzle piece. It doesn't mean I'm blindly buying the Aussie dollar, given that 200 billion of tariffs may be hitting the market this week. But these are the barriers, 71.5 on the downside, 73.50 on the upside. All right. If you want to trade within that range, there you go. These are levels where you're happy to engage if the market reacts accordingly. And it will react there because we have tons and tons of important players in the market there. Dollar indication, as you can see, it's an indication calculated by Michael. Michael, one of my traders. Thank you, buddy. Great slide. So now we have an indication for the positioning of the dollar itself. New Zealand dollar on its way to a long signal. All right. As I'm talking, I'm watching the pound and it keeps dropping and dropping. You know what? 128.50 next target. 128.50 next target. Volatility: euro increasing, pound increasing, yen increasing, and the VIX increasing. Yes, August is over, September is back, liquidity is going to return, and we're going to make some money. I love it. Option pricing for this morning: euro dollar bullish, pound dollar. Oh, sorry, that's all. Option pricing. Sorry, that's all bearish. It's all bearish. Euro dollar bearish, cable bearish, Aussie dollar bearish, euro yen bearish. Okay, this is wrong. I put it in there the wrong way. Option pricing is all bearish for euro dollar, cable, Aussie dollar, and euro yen. All bearish. I apologize. Option flows: bullish Canadian dollar, yen, Swissy, gold. So risk off is bullish as an indication, and bearish Aussie, pound, euro. So have a pick, but make some money. There's weakness this morning. Potential trade: short Aussie dollar. Why? US dollar strong, ISM expected, solid economic performance over there. Aussie dollar, CFTC caught positioning long. That sucks. Okay, we are looking to short the Aussie dollar, but we expect weak economic numbers this week. So what is the risk to the trade? Obviously, this extreme positioning. So we're prone for a short squeeze. The trade may not work out because of that, and or the US may not impose 200 billion on additional tariffs on China, and or we would get disappointing US numbers. So please understand the context of the trade ideas, the context. If new tariffs come, if US numbers come in solid, then and Aussie numbers come in weak, then hit the bid, short the Aussie dollar. But if the opposite happens, obviously this is a great short squeeze candidate. You would immediately buy the Aussie dollar then. Okay. Unfortunately, you need to use your brain when trading. It's highly effective. If you can see the potential for the short squeeze, right? But fundamentally, the trade direction is short. So I put in a very conservative short at 72.75, down to 71 the figure, and stop loss at 73.63. Let me take a look at the time, 22.5 minutes. Let's leave it at that. Have a great week. Make some pips, especially to my traders, and enjoy your coffee. And see if you potentially can get into the short and the cable as well on a retracement. Don't chase markets. Be smart. Trade where the big boys trade. Don't trade anywhere in the middle of nowhere. Jens, thank you very much. And I wish you all a great week. Thanks, guys. See you next Monday. Thanks for showing up. Bye-bye.
Thank you, Big Boy Jay. Tomorrow is another day. We have 5 days a week, 5 different traders, only big boys. So if your time allows it to you, just visit us every day to the same time. And if the time is not that much on your side, a couple of hours later, it will be available in our YouTube channel. Just visit youtube.com/AdmiralMarketsFX. Thanks to all. Have a great start to the week. Bye-bye.